Hi, it's Rob Hache from Home Affordability Solutions. This is just a quick video to explain how we work out HAS Smart Share Payment Assistance. So, for those of you that are familiar with our product, we um, basically allow clients to enter into the residential lending, whether they're a first home buyer, next home buyer, or investor, with as little as 2.5% non-gen savings. So if we, for example, have a client that's looking to buy $1 million property, they only have to have a non-gen savings deposit of $25,000, and you would then go to your first lender, Pepper Liberty, or First Mac, as of the recording of this video, and organize a HAS-based facility of 17 and a half, which would add up to the $1 million. So we're effectively the deposit boost finance second lender. Now, what you do is you go to your first lender calculator, work out the 80% lending, and you would then put in our payment of $1,549, which is interest only at 7.75%. So if they qualify for that, then they are well on their way to qualifying for a HAS deal from a servicing component. Now, what we do have fees associated with this lending. So they get a HAS-based facility of 175,000. We add payment assistance of 5.5%. We capitalize 55,000, and we also have a one-time fee of 9,999. So the total facility they will have is 239. That's why the payment's 1549. So why the 55,000, and where does that come from? Okay, so it is made up of two pieces. One, as you're already probably aware, we are a shared equity lender, so there is a portion of shared equity paid upfront and capitalized. We also have a cost of funds for this type of lending. Those of you who are in this space, it's about 12 to 14% to raise these types of funds. And what we do is we buy down the rate to 7.75 interest only to make it more affordable from a servicing capacity. We are the Home Affordability Solutions after all. So the next video, it will give you a demonstration of how we work out that payment. And you're welcome to reach out to me anytime with any scenarios you might have, and I can walk you through. Thanks. Okay, so many of you are already familiar with our website, yourhas.com.au. We updated a little bit. This is where you can actually have a look at the Smart Share 3-minute explainer video. I often share this with brokers and clients so people can get a basic understanding of what you're trying to do for them. For you, the mortgage brokers, you go into here and you will get access to your portal. Those of you that are already accredited, you just go into the HAS accreditation area anyway. And for the new brokers, you just work through an accreditation process. It's quite simple. And you'll get to this page where you can have a look at the HAS repayment calculator. And this is how we break down where the money is going and how we're calculating these types of payments. So the example we had was it was $1 million with a $175,000 base facility, and then it gives you the breakdown. So there's a little video in here. I'm just gonna go directly to that video, and I'll see you on the other side.
Now let's look at your HAS total funding line. This is the full amount HAS gives you to help you buy your home. It is made up of 4 parts. 1. HAS base funding, up to 17.5% of your home price. 2. HAS facility fee. This covers the broker fee, legal fee, and our risk fee. 3. Equity retained upfront, a fixed 2.5% of your home price. 4. Payment assistance, a fixed 3% of your home price. You can refinance anytime after 3 years. When you do, you will pay back the total funding line, minus any payment assistance that you have not used. Your Smart Share loan has 3 main parts. 1. Monthly repayments. 2. Total HAS funding line. 3. HAS shared equity. We'll explain each of these in clear, easy to understand steps. When you get a home loan, one of the hardest parts is the monthly repayments. If those repayments are too high, banks might say you don't meet their serviceability rules. To help make this easier, HAS supports you in two ways. We bring forward 2.5% of your future property growth and add this to your facility. We also give you an extra 3% of your purchase price, which is paid in monthly installments, contributing to your monthly repayments. Together, this adds up to 5.5% of purchase price in support. This extra help reduces how much money needs to come out of your own pocket each month, making your repayments more manageable. Let's look at a simple example using a $1 million home. The HAS space funding provided is $175,000. This means HAS provided a total funding line of $239,999. Without any support, your monthly repayment would be $2,466.66. But because you receive monthly assistance from HAS, you only pay $1,549.99 each month. Now you might be wondering, what happens if the property has decreased in value? HAS doesn't share in any decrease in your property's value. You only share a portion of the growth above 10%, if and when it happens. We don't want to keep you forever. SmartShare is designed to help you get started. As soon as your property grows enough for you to refinance and keep under 80% LVR, you can look to transition into a traditional mortgage with the aim to avoid paying LMI upon exit. And when that time comes to exit, your broker and HAS will be here to help guide you through the process.